Well, sorry, last video did not have audio. I'm still retarded. But hey, we're going to talk about the China opportunity, the one that I was talking about around this time last year, while simultaneously we had people such as Dr. Marco Metzler, complete fraud, claimed he was going to be, part of the Evergrande debt collection from DSMA, a company that does not exist. And you had Boss Blunts, his little helper, that was helping regurgitate his narrative. Now, what came of that? Absolutely nothing. Let's go ahead and look at the China opportunity in today's day and age, and hopefully reality should be setting in for you. So about a year ago, again, remember this guy? Took pictures like this that's clearly, I mean, talk about getting sold. I would not trust this guy as far as I could throw him. And judging by his appearance, I don't say I could throw him very far. But this claim about the insolvency petition, nothing ever came of it. Nothing was even ever discussed about it. Everyone just kind of let this guy walk all over them, feed them nonsense, and no questions were asked. But it is what it is. Just keep in mind, we're going to be going over facts here, not nonsense. He also says December 12th of this year, China is preparing for the global financial meltdown. You've been saying this for a year, but literally all they've been doing is preparing to reopen their country, their borders, and everything else to grow their economy, which is exactly what's about to start happening. So again, if you want to learn how markets work and how markets are headed and where they're headed, then you don't need to be listening to people on social media. Because again, they don't care about you or your time or if the information they're giving you is accurate, which is why, again, they've led thousands of people into darkness. Because again, I don't know if you've looked at the markets this year, but if you're holding AMC, GME, and BBBY all year and not just playing the runs, it's been a pretty rough year for you. So again, the answers do exist, but not with people like this, who don't put in any effort to tell you the truth. So now that we know that basically everything that was said to you last year, as far as a retail standpoint, was false and accurate and regurgitated from the media, let's talk about reality. So you're going to want to watch this. I made this video a year ago, just about. This is China 2030. It goes over the China sleeping giant opportunity. When she awakens, she will move the world. That's actually the same tweet that Ryan Cohen sent a little while ago. So I will have this in the description below if you want to watch it. Same goes for this one. This is where I explain China's transformation. I don't go off of news media posts. I don't go off of anything other than source documentation and why this is all happening and how you can tie it into events that have already occurred this year and last year and the year before. Both links of those are in the description below. Once you watch that, you're going to have a little bit more understanding about the rest of this that I'm going to be talking about, because I have gone over most of this before, and I'm not going to regurgitate it here because, again, I've already gone over this several times. It's all available on my channel to follow. And again, once in a lifetime opportunity here. So what's the deal? China has been in a COVID narrative loop since April of this year. Now, what do I mean by that? I mean, COVID was supposed to be over in April. China unlifted their 3 red lines policy. They basically, stopped the COVID cases. COVID deaths started going down. But then all of a sudden, ever since April, they've been in this narrative loop, again, where the media just keeps saying more COVID cases, more COVID cases, more COVID cases. And the reason for this is because the Western part of the world was not ready to adopt their economy. Now, what do I mean by that? Well, Western countries are adopting Eastern economics and setting up for Industry 4.0 transition, while simultaneously, at the same time, bashing the country we're adopting, which is China. They want all of retail staying away from China. That's why you see all of the FUD going around social media, and the content creators are helping spread it to keep you away from real opportunity, and more so, using all your time following them, learning nothing. Now, this is the SPY. This is the MCHI. The SPY is an ETF that holds American tickers in the S&P 500. The MCHI is the Chinese ETF that holds tickers from the China Dragon Index. Now, if we take a look at these overlaid, you will notice something. This is where the term that I've dubbed called the yin-yang comes from. Because guess what? This X right here, where these 2 lines cross or meet, that is when the repo demand started to surge in 2021. And the repo demand is in tandem with inflation. And we saw this crossover happen during the first rate hike of 2021. And since then, we've had nothing but downwards trending for the Chinese markets. And after that cross, we saw the United States continue upwards. That is the yin-yang. So the theory goes, based on the macroeconomic data, developments, cited papers, cited works, and legal documents, this should reverse course. You should see the United States continue to go down in their downtrend, while China starts to go up in their uptrend. The reason why, there was a massive credit re-rating opportunity that occurred last year during the whole China Evergrande FUD. What was really happening, what really happened, and why China's developers had to deleverage from the three red lines was simply because of a credit re-rating opportunity. If you're raising rates over the United States, you need a hedge for that, and the hedge is none other than China. Now, as I've explained, China will recover as the United States declines to pay off our debt. In order to do this, we had to accomplish two things. We had to get the forward-looking SOFR rates, which are secured rates, and the SOFR is the repo. The chart on the screen here is the repo demand. That crossover that you just saw on the SPY versus MCHI charts started right here, right during this time frame. Now that we're all the way up here and inflation has increased with it, we're doing what's called SOFR harvesting. We're basically sitting on enough demand to garnish the forward-looking SOFR rates needed to make this all work. And as far as paying off our debt, China's economy reopens. That's the hedge for all these institutions on the United States side that have been pushing out news articles telling you China's going to crash, China's a bad investment, China this, China that. Well, at the same time, not only are we adopting their way of life in part, but we're also adopting their economy, and we're also investing at the bottom in historic levels. Follow the money, people, not the FUD. Okay, but what about Evergrande and the financial meltdown that you've been hearing about only from Twitter and only from people who have no clue what they're talking about? Well, that's why, because they have no clue what they're talking about. The China Evergrande narrative was simply the three red lines policy taking effect in China. If you don't know what this is, I've covered this as well. Link to this will also be in the description if you would like to learn about the China three red lines policy and why China developers were in the situation that they were in since 2020. This was enacted in late August of 2020. It was lifted in February of this year, which is when I originally expected China to start running. But then we had the COVID loop start due to the fact that we did not have the SOFR rates needed or the inflation needed to make this all work. So to recap, China has been in a COVID loop during historic lows while institutions at the same time bashed the country while simultaneously loading up at the bottom while waiting for the US to achieve the SOFR rates needed. Every social media influencer has done nothing but join in on the FUD of bashing China, keeping their followers and viewers away from a real opportunity, spinning FUD about other nonsense, and leaving them with nothing other than misinformation that could have made them a nice chunk of money. Again, creating FUD videos is not the way to go. You want to watch videos that have substance with documents, evidence, some kind of cited work, not just the opinion of some idiot who doesn't want to go get a real job and would rather sit on the internet all day and feed his gullible followers misinformation because they know that they'll never be fact-checked on the information. That's the reality of the situation, and you're never going to learn markets until you stop relying on everyone else other than yourself. Because again, you don't need anyone else other than yourself. All you need is a little bit of guidance to know where to find the information needed to research markets on your own, and none of that will be found following anyone on Twitter, YouTube, Reddit, or anything like that. You're just going to get led down the wrong road. Unless you watch me, but I'm retarded. So again, don't join in on the FUD. Find out what's going on. Since when has everyone online been right about anything? Never. So if everyone online is saying something, you should probably do the opposite. Just a rule of thumb I like to live by. So basically, in essence, China is the hedge against the United States decline that's coming during the first half of 2023. Then, once that is over and done with, that is when I expect the memes to take off, because we will have Fed Now, instant payments, and other developments that will be coming out next year. So that is all in the works. And again, developments could change. Yishay, who doesn't seem to understand that markets are dynamic and move in multiple parts at the same time. Again, if you don't know how to, if you don't understand a situation, don't trade it, period. If you do, without understanding it, it's no one else's fault but your own. But this could change. But again, the way it looks right now, everything's going according to the plan that was originally set out in 2019. Recover China, pay off the U.S. debt, do it in tandem for the yin yang. By the way, if you're thinking the Chinese stocks are oversold, yeah, basically a traditional technical analysis mindset with these stocks is going to get you. If you're selling covered calls from the group, be very, very careful. These share prices that you have these stocks at are phenomenally low, so low that the institutions were killing to get for it, basically. So there's no reason to get those shares called away if you don't have to. A little bit of patience here and discipline will go a long way. This can provide generational wealth. You're in at the bottom on a new emerging investment opportunity. I mean, for God's sake, they're called emerging markets. Why would emerging markets crash? Makes no sense. And people saying that haven't done any form of research into the situation. They simply just want more views, more followers, more likes, and all that because they don't care about accuracy. They only care about their own self-preservation, which can only come in the form of ad revenue for views. And unfortunately, you get more ad revenue despite if the content is accurate or not. But what you'll find online is that the more accurate the content is, the less views people get because it doesn't sound good or feel good. You know, that's just how the internet operates, it seems like, in this investing space. But yeah, if you think these stocks are overvalued, man, hopefully you see the research is greater than the amount of likes, views, and subs you have. But simply take the charts and zoom out. This is the HSI index on the quarterly. The quarterly. Look at the RSI. It's way down here. You know what? It's basically, since before this time, this is like as low as it gets, but even lower slightly. We haven't seen it this low in history, basically. So, again, lifetime opportunity staring you in the face. You just have to get past the FUD, the fake actors pushing the FUD, and yourself that's getting in your way, choosing, to hate someone because they're telling you something that goes against the masses. Well, let me tell you, the masses are fucking wrong. They're always gonna be wrong because the masses are lazy, period. Anyways, those in the group that followed, I hope that this is finally paying off for you. As far as covered calls, be very careful. You want to preserve your cost basis. Wait till the downtrend presents itself, then sell the covered calls. But right now, not something I would do. Be patient.